Assalamualaikum and hi everyone. I am Madam Yusna Liza. So welcome back. Now we are going to have another session of how to prepare a statement of cash flow using direct method. And our question today is from FAR210, February 2021, the one conducted in UiTM PERAK. So if you want to have the copy of the question, you can go and check the description and download the question. Okay, let's look at the question now. The information given is about the company called Bukit Indah, and you have the 2 years statement of financial position here, which is of Bukit Indah the company, and you have also the statement of profit or loss, which was for the current year. So the current year is actually it's 31st of December 2020. So you are given those two information and with some additional information at the bottom here. And after that, you have a requirement, which is for 16 marks. You need to prepare the statement of cash flow using direct method in compliance with the MFRS 107 statement of cash flow, which is also word forward the same as per the IAS 7 international standards statement of cash flows. So I'm going to use the so-called color-coded method to help you preparing the cash flow statement with a more organized manner. All right, so what you need to do first is, in my method, is that you need to first set up the or prepare the template. So you can see here I've already prepared a blank template with some headings of each types of activities in my statement of cash flow for Bukit Indah. So you have the cash flow from operating activities, cash flow from investing activities, cash flow from financing activities, and the cash flow, the net cash flow coming from those three activities, which is actually going to be reflected in the cash and cash equivalent schedule. So for your information, the answer to the cash flow question is actually from the cash and cash equivalent schedule. So after you have done that, what the first thing to do is to find the cash and cash equivalent itself. So in our case here, you should know that the components of cash and cash equivalent schedule I've already highlighted in green. For your information, the cash and cash equivalent, I use green to highlight the so-called items that will fall under investing activities. I have used blue, and for purple, the light purple there, you can see that I am using it to classify the operating activities, and the brown color there is used to classify or color code the financing activities. So we will start off by doing the calculation for operating for the cash and cash equivalent. So if you can see here, marketable securities, the one that you have here, you would see that there are two balances. First, you need to go and label the balances ending and which one is opening balance, and you're going to look at the changes of that two balances to find out whether there is a net increase or a net decrease in the cash and cash equivalent. So we'll be doing the changes here. So you can see that in the changes here, for the marketable securities, there was a decrease because from 5.75 down to 2.57. And here, marketable securities, yes, bank, you can see there was an increase, right? So this column is for your column for changes. Okay, so we have done that. And the next one is bank overdraft, which is your current liabilities. So the bank overdraft has increased, meaning that the credit balance in our bank overdraft here is credit balance. So you can see there was an increase of 4278350. So this one will be reflected in the statement of our cash and cash equivalent schedule. So we'll put here And the first one is marketable securities, right? You can see here marketable securities and bank, right? And then the next one is the bank overdraft itself. So for the bank overdraft, I'm putting a bracket there to show a negative cash flow, and then the figure has gone up, and the increase for the bank overdraft was 4278350. So now we're going to find out what are the net changes, and the net changes is a net decrease of how much? 1,583,900, and this is the one at the end of the year, and this is the one at the beginning of the year. So what you got here, you are going to show that in the last section of your cash flow, which will be the three last row there. Cash and cash equivalent at the end of the year will be the one that you get in this column, 10,444,600. The one at the beginning of the year would be the one that you got here in the beginning of the year, and the net decrease should be put in bracket, and the wording here, you must make sure you write the net decrease. So net decrease, do not write net increase. So for information, the total three activities coming from financing, operating and investing should come back, or must come back, to 1,583,900. So you have done that part. You can you would perhaps notice that I have already done the color coded part here. I color coded the activities. So now I'm going to look at the changes of each the assets, liabilities, equity and liabilities here together with the reserve. So what you will see is that these are the changes. They've already compared the beginning with the end. So I take the end of the year minus the one at the beginning of the year. We want to see whether or not the changes, for example, in land, there was an increase in the balances at the beginning to be 13.5250 at the end. Is that due to the more acquisition or purchase of land using cash? Same goes for the plant and equipment. We want to investigate whether or not this is due to the disposal. So all this must be analyzed to see whether or not there are some cash inflow or cash outflow throughout the year from the changes in the balances. What are the cash receipts and what are the cash payments? Okay, for your information, short-term investment we do not include in the marketable, in the cash and cash equivalent. The reason is because this is not in form, it is part of cash and cash equivalent, and also nothing state that it is less than 3 months whatsoever. So the short-term investment will have to be disclosed. The changes, whether it is a disposal, for example, will have to be reflected in the investing activities. Before that, the information here did confirm about the marketable securities, which is, it is actually part of cash and cash equivalent. Right, so after you have done the comparison, we can now start the preparation. And for direct method, my advice is you can use the top bottom approach, where you can start by finding what are the items under cash flow from operating activities. So for cash flow from operating activities, you are going to find out what are the cash received from the customer using the reconstruction of the accounts receivable. So what you can do is to first put the balance in the accounts receivable. The balance is from your statement of financial position, the beginning of the year. But before that, you have already calculated or have already analyzed those items in the statement of financial position. So whatever that has been analyzed, you can just tick them together with this. And now we are trying to analyze the changes in receivable, trying to see how much was paid by our customer, right? So basically, that means we need to go and reconstruct. So the beginning balance will be put on the debit side, somewhere in the debit side. Here it will be in a somewhere in the credit side, the accounts receivable balance carried down. So something like this, you can see here. Then the next task is to find out what are our credit sales. So to get the credit sale, you need to go and check what was given in the statement of profit or loss. So in the statement of profit or loss, you will see that the credit sales are not informed directly, but you should assume these are all credit sales since there are no information about cash sales. Okay, after you have done that, you'll be able to total up the item here on the debit side, and that will be deducted with the balance carried down, and that will give you the cash receipt from customer. And I will use this cash receipt from customer because it's a payment. I use blue, the payment that you receive. So that means there was an outflow or inflow. It is an inflow during the year. So leave it as it is. The next task is to find out what are the cash payment to supplier. Cash payments to supplier means what we paid to our accounts payable after we have bought goods on credit or taken up their services on credit. So what you should do first is to find the balance at the beginning of the year for the accounts payable. We are trying to find what is the payment that we made. So meaning that we are trying to find out how much is credited to our bank account. This side on the debit side. We're trying to find this. Okay. We're trying to find that figure, which is trying to find how much is our payment. To do that, we need to first find the purchase. To find the purchase, you need to go and reconstruct the inventories account. So to reconstruct the inventories account, you can take the balance at the beginning and the balance at the end of the year from the inventory account, right? Where is it? It is here. So we have done for the inventory here. Yeah, the inventory account. Right now we are taking things, just now we took from accounts payable. So just make sure you take whatever you have analyzed. And after you have done that, you will have to find out what are the costs of sale. So the cost of sales is from the statement of profit or loss. So if you go to the statement of profit or loss, this is the cost of sales, right, which is operating activities, because that was part of the cash receipt, cash payments to suppliers information to get the payment. Okay, then you put the figure here. After you have done that, you can total up the credit side and you will get the total column, and when you deduct the balance brought down, that will give you the purchase, and that purchase is actually the purchase that you are looking for to include here, right? The credit purchase, and that is the same 767,455,500, which was from the inventory account. And now we can find out what are our cash payment by totaling up the credit side of the accounts payable and then deduct with the balance carried down on the debit side. So you will have the bank that was credited in during the year for all accounts payable to be 6,637,500, and you will show here in bracket because that shows the outflow. Next one is to find cash payments to other expenses. Cash payments to expenses which are non-cash expense, non-cash expense, meaning that other expenses, cash paid to employees and other expenses paid. Okay, that would be reconstructed again using the selling and expenses given. So I have reconstructed the operating expenses. So first, what you need to do is to check whether in the current liabilities section you have any accrued admin, accrued selling, or anything which are under accrued operating expenses. You can see here none. You have dividend as the accrued expenses, but that was under financing activities. You have tax payable, but tax payable has its own special row here already, right? So you don't have to put tax as part of the reconstruction to find the uh, other expenses paid, because tax has its own special line item. So we will have to start off put the uh, selling and admin expenses, but here there are no selling expenses. This one was from the SOPL statement of profit or loss, this figure, right? And then you can find out and remove from the expense the non-cash and non-operating expense. So in your information number 1, you are informed the admin expenses include depreciation on plant and equipment and on motor vehicle, which was a non-cash item. I used the coins or the light blue for the non-cash item. So if you total up this, you would see that these are the things that are non-cash expense, because depreciation does not involve any cash. And that one would be reflected here, which is the total from the expenses from depreciation was 1440, and now you can total up. There are no accrued prepaid whatsoever, so you can total up the credit side and deduct with the debit entries, and from there you'll be able to find out the cash payments to other operating expense or cash payments to and on behalf of employees, and that would be 135. So you are done with that. You will have the first total, which is cash flow generated from operation, which is an inflow. After that, you will be doing the income tax paid. You're going to show how much is the tax that you paid to the inland revenue during the year. So for tax, go and check if there is any tax paid information in the additional information. None, but you would see there are some information on tax here, 750,000, and we are going to find out what are the tax paid. To do that, you can reconstruct again the taxation expense, and what you do is I put the balance, which is the tax payable balance by brought down here. The tax here is balance brought down the tax payable, and I put the one at the end of the year as the balance carried down for tax payable, 290,000. The tax expense is included on the credit side, and we are trying to find the tax paid. So total up the credit side and take the total minus the one the entries that you have on the debit side. So the missing figure here will show how much is the tax paid during the year, which was 910. So this one 910 is the one which were in working for. Remember, I numbered all my working so that I have an easy cross reference, and therefore the tax paid was 910, an outflow. The next one is to find whether there is an interest or finance cost paid, which will also include redeemable preference dividend if you have any that you paid during the year. So, or maybe debenture interest, bank overdraft interest, loan interest. Those are all finance costs paid. So for your information, to find this is to find what was credited to the bank account and debited to the finance cost component here. But in our case, if you check in the current liabilities, there are no accrued or prepaid expenses related to our finance cost, maybe interest or whatsoever, none. Therefore, nothing for us to find. So if you can check to the statement of profit or loss, you would see that this finance cost was actually 145,000. And here you would assume that what you paid is what you incurred. So whatever that you paid is whatever you have to you incurred during the year. So for that reason, you do not need to reconstruct the finance cost or interest expense account, because what you have here, 145, without any prepaid or accrued expenses, this would be what you actually paid during the year. So you put here the amount that you got from the statement of profit or loss, and that one would be 145. 145, right? And that one would be an in or outflow or inflow. It will be an outflow. Next, the total, the cash flow from operating activities. If you see, the cash flow um, would be how much? The cash flow from operating activities, it would be 3597750, which is an inflow. Now we move on to the cash flow from investing activities. For the cash flow from investing activities, I will start with the land. So if you look at the land, there was a changes where there is an increase in the land balances by 2 million. And if you look at the additional information number 3, yeah, number 3, this is regarding information related to land, right? But there was a revaluation during the year. So to confirm that, if you go to the asset revaluation reserve, you can see that here, yeah, this part 2 million was because of the increase, the new revaluation surplus that took place during the year. Beginning balance was 0, at the end of the year was 0. So this was exactly the same difference here, the same amount. 2 million here and 2 million here. So it means that the changes in land is not due any cash that was spent for the acquisition, but that was exclusively due to the revaluation of land. So therefore, for land, it does not involve any cash inflow or cash outflow. In terms of workings for your land, if you want to see, I have already reproduced here. You can check here where there are nothing to do with any cash transaction, because a surplus was a no cash flow item, non-cash transaction. And for the asset revaluation reserve, there are also no information that relates to any other things, perhaps bonus issue whatsoever, none. So the changes in the asset revaluation reserve here, which is the one related to land, is exclusively due to the revaluation surplus. So we are done with the item on land, the checking, but it does not affect your investing activities in terms of the movement of cash. Next is the plant and equipment. Look at this information. You are informed this is at net carrying value. When it is at net carrying value, it means that this is already at cost minus accumulated depreciation. So you can see the changes was 1345, and you are informed about one information here regarding the investing activities, where there was an equipment at a carrying value of 345 was disposed at the beginning of the year. So the issue is we want to know how much is the amount. So if you check the information here, you would have no information telling you about any loss on disposal or any gain on disposal out of the disposal of equipment. So what you can conclude is that this was actually disposed at the carrying value. So at the carrying value of how much? It is also at the same carrying value of 345, because no information. So you would assume it was disposed of at a carrying value of 345,000. Okay, that was what you have done. And then that would be the one that you will have to show in your investing activities. So this 345 here, the one that you have a 345, would be the one that you will include under investing activities as your cash inflow. That was the shortcut way of doing. So you can put that item proceed from the disposal here, disposal of plant and equipment, this one, and that would be how much? An inflow of 345. So inflow, right, 345. Next one is to show you how do we do this via account. So the first thing to take note is that is not only about disposal. We may also think of whether in the same year there was also an acquisition of plant and equipment. To do that, you can reconstruct the plant and equipment account to check if there is any new acquisition. Put the balance, which are already at carrying value. Remember to include your depreciation for plant and equipment in the account. The reason is because the depreciation here is included, is this the reason that it was already at carrying value. However, if you have an account called accumulated depreciation separately, and that would need you to go and incorporate the depreciation into the accumulated depreciation account. But here you include in the plant and equipment. So after you have done that, earlier on we know that there was a disposal, right? That disposal, I have informed no information, so the disposal was for cash, and the cash amount there was equal to the carrying value. However, if you have a profit, you may have to show the profit on disposal here. If you have a loss, it should be on the credit side of the disposal. If you have a gain, it should be on the debit side, but here none. So what we get is the proceed, which is our cash inflow. At the same time, if you total up your equipment account, if you total up this side, the credit side, and you will have to compare the credit side with the debit balance, and you would see there was a difference, and that difference was due to the new acquisition. Take 7.2.5 million and then minus with the entries that you have here. Maybe you may have a revaluation surplus or whatever other item. Include that first if you have. But here at the end, the balance or the bank amount that you have spent during the year, the cash that you spent to acquire PPE was, plant and equipment was 250,000. So that was a new acquisition. So include that in the statement of cash flow here. So you will include here, right? And this is an outflow. Okay, next one is to find out the next item. We have done this, so now we will be doing our last motor vehicle here. So you can see for motor vehicle there was an increase of 155, and you need to go and find the motor vehicle. Don't conclude that was straight away the acquisition, because remember motor vehicle will also add carrying value. So we will have to find out first, put the balance, put the balance carried down, put the depreciation for motor vehicle. You can do this. And remember, depreciation is non-cash, right? And now find out what are the acquisition of the motor vehicle during the year by taking the total minus the balance. So you have bank item to be 345, or cash amount of 345, and outflow. Do not get confused with the 345 on top of it. So this one was actually an inflow, and this one was an inflow, but this one was an outflow, so it's different. So that's why I'm putting a different color here to differentiate what you have. Okay, next one that was done for motor vehicle. Now we will be looking at two more items, which is investment and short-term investment. So you can see here 300,000. These items are not depreciated. This one also not depreciated. So therefore you can just conclude the increase was due to new acquisition of investment, and the decrease in short-term investment was due to the disposal of short-term investment. So that is one shortcut way of doing. You can straight away find out the figure by doing this. Straight away the workings, you can have it here, right? You can show the workings here, what you have at the beginning, for example, brought down, minus what you have at the end, the carried down balance. Same goes for this item here. So the 300,000 was an outflow, and 90,000 was an inflow. That is one way of doing it, and that can just speed up your time doing this. And however, if you want to see what is the account reconstruction, you can check here. Okay, you can check here. I put it here, yeah, for the disposal of short-term investment and for the acquisition of the long-term investment. That was a purchase and outflow versus an inflow, so that in case you reconstruct the account, you can cut short things if that is not necessary to reconstruct. The last item under your investing activities is normally your interest income and your income from investment or investment income. So investment income here, which is the one that is generated from the dividend and also from the interest that you may have invested some investment outside your company, and that gives you the investment income. Here the investment income is 115,250, and this investment income, yeah, you need to also check if there are any investment income receivable here. None. So if there is, you need to go and incorporate that in the reconstruction of the T account. So for this one, you can also have the same conclusion. Whatever that you earn, yeah, whatever that you earn for this income is whatever the cash that you receive. So this one is telling you that the cash received equal the investment income earned. So I put here investment income received. Okay, and the amount should be the same because no accrued prepaid issue there. And that would be an inflow, right? So now you can get the total for your item there, and you can see that there was an outflow. For the first activity, it was an inflow. The second activity, there was an outflow. Now we move on to the next item. We start off with the share capital here. So the changes here, you are informed that was due to right issue. So if you look at the information number 6, that was due to right issue. So means that that was due to the information that brings cash to the company was because of the right issue. Okay, right issue. The right issue was 2.7. So unless you have other information about bonus issue or share buyback whatsoever. But here the changes here, if you were to do the T account, that is due to the right issue. So the right issue here is the one that is the cash receipt that you had from the issuance of rights, right? 2.7. Include that here in the statement. Put this here in the statement, right? So that one would be proceed from right issue. And the proceed from right issue was that was how much? 2.7, and inflow. The next item is the redemption of preference shares. How do I know it is a redemption? You may wonder. because the for the redemption, I know it is a redemption because there was a reduction in the balance. So at first, the item here, you can see the balance was 7.85 million and then it goes down to 4550. So there is no information whether redemption out of profits or out of fresh issue of shares, but we know there is a redemption. So the payment or redemption was 3299,200. You can also see the impact. If you want to see that, you can cut short not to do this. You can just show the workings, but this is trying to make your basic debit credit even more even stronger. So that one is the payment. Yeah, the payment were made. So that payment on redemption will be put here on redemption. Okay, that is the payment. And our redemption of preference shares, payment on redemption was 3299,200 and outflow. The last item that you will include in the statement of cash flow is the dividend paid. So for the retained earnings, I'm not using the informations because the information on dividend is available in the dividend payable. So we will do this dividend expense account, and also the information on the dividend expense that were appropriated from the retained profit was given directly in the additional information. So I'm not using the retained earnings because this one is not indirect method, so we do not use that. But however, that might be useful if there is no information about dividend at all on how much is the payment. You may use the retained earnings to find the dividend payment, but for today you already been given the current year dividend. So what we will do is, we know that dividends were from the retained earnings, but since that was given directly, so I am just opening up the dividend account. So to do that, I open up the dividend expense, the balance brought down first, and then the balance carried down, the second thing that I include. And dividend expense or the current year dividend that was given in additional info number number 2 will be shown here, and this is what you have to include if you prepare a statement of changes and equity, where current year dividend may include proposed final and the interim dividend. So you total up this item, total up, then the difference on the debit side will be the payment of dividend. The payment of dividend, which is going to be your outflow. Okay, that was the financing activities, the final item. There are no more items for you to go and find. This done, and this is for dividend paid, payment of dividend, and the total coming from this is going to be an outflow of 483936 and the total here, which is our total for the 3 activities, must come back to the same amount, right? So this is going to be the total that you have for your cash flow. With that, I thank you for watching. This is the presentation of statement of cash flow using direct method, using the color-coded approach. I hope you will have a solid understanding on the preparation of cash flow after you have watched many of my videos. And with that, I thank you for watching. I'll see you when I will see you.